Good morning, traders, and welcome to the live stream. My name is Charles. I come from a community called Piratetraders where we are focused on the ES and the NQ and how they move through the two-way auction process. If you are new to the Bookmap channel, I recommend you subscribe. They are putting out excellent stuff all the time and you don't want to miss it. So hit that subscribe, hit that notification bell, be kept up to date. And if you don't mind, hit the like button because that's just for my personal ego. It makes me feel good on the inside. It makes me feel real warm. It looks like right now we have 19 people hanging out. Welcome 19 people. I'm sure that number will grow if you smash the like button. If you are watching this in the Bookmap Discord, you can leave comments in the tab that says Futures-Charles, and I will respond to you there. All right, well, let's jump right into my analysis on the ES. Okay, the ES is the futures contract for the S&P 500. And basically I trade it using an auction process, meaning I look for exhaustion in buyers and sellers and then take the trade the opposite direction. So what we've been talking about over the last few weeks is that the market was in what we call a balance area. A balance area is basically just a range where the market is kind of stuck going sideways inside that range. Let me just get my drawing tool up here and I will point to it on the chart for you. It is this, there we go. It is this box that you see right here, this white box. That was the balance area. So that was the range that the market was stuck in. It tried to go lower, came back to the opposite end of balance. Tried to go higher, opposite end. Tried to go lower, opposite end. Tried to go higher, lower, higher. Okay. Well, then finally we broke out of that balance. We were finally able to make a move to get away from it and make new all-time highs. But what we never did was come back to back test the breakout of that balance area. Well, that is exactly what happened yesterday. And this is what we're going to talk about first thing this morning, because yesterday's market left a lot of mixed signals behind. And so before I dive into the weeds and start talking about all the specific things and how to read them and what they mean, and I get too confusing with all of this, the simple thing you need to keep in mind is, on a bigger picture, forget intraday drama of up and down and up and down and up and down. Bigger picture, the market was in an area. It broke out, it came back, it back tested it, and the information from the market was it did not need to stay inside there. It did not need to rotate to the opposite end. The highest probability based on that one piece of information alone, and it's a valuable piece of information, is that the market is going to continue up to the upper end of this white box. Okay, which is around the 6190s. That is the highest probability location for the market to go based on a breakout and back test that finds support. The most likely thing is we're going to continue to the next high. Okay. Now, the markets these days are driven by computers. It is all automated trading and it is all designed to fool other computers and to throw off, basically any pattern that's readable so that it's very hard to execute on a day time frame. That's on purpose. So whilst bigger picture, we could see this as a V-shaped reversal yesterday. The market tested the previous balance. It came back up, made that V-shape, right? And any other time we saw that, we would just be waking up this morning as bullish as we could be, right? We would be like, market straight to the moon. This thing is so bullish, right? But this is where we get into the complication of it. The way it did that yesterday was not bullish at all. It was the least bullish way it could possibly do that. If you look at the lows, we reversed at basically the exact same level over and over and over again all morning long. That implies that there's a lot of stops sitting below yesterday's low. Okay. There's a lot of stops below 6103 because as these people were going long again and again and again, buying up support down here near yesterday's low, they got to be putting their stops somewhere. So somewhere down here, there's a huge pool of liquidity waiting to be tested. Okay. That is the first thing that is just not bullish about the way that yesterday made the low. What we would have liked to have seen is what we call good excess. So a low that looks like this right here. What we would have liked to see is just a single set of letters poke down there, the volume taper off less and less. That would mean we can really turn around and start going and making higher prices. But this low is just very, very weak. It's not a good low. So that is suspicious. That takes away some of our bullishness this morning. That gives us caution, right? And then you can see the market spent most of its time and brought in most of its volume yesterday at the lower end of the range. So this profile that you see right here, this is yesterday's range. That's the regular trading hours trade from yesterday. Most of the time, most of the volume was down here in the lower end of that range. Again, that's not what you get with a V-shaped recovery. You get tapering of less and less volume and time, and then you jump right back up out of there. So that too is just not bullish at all. Okay, to see that right there. And then lastly, we left behind a weak low on basically every single low on the way up throughout the day. Weak F low, weak J low, weak K low, weak M low. So that tells us this wasn't real buyers. This wasn't actual human beings that were getting bullish, that were wanting to go long the market because they think it's going to make new all-time highs. These were robots. These were computers that were taking trades at exact levels to artificially force the market back up towards its opening price before the close. Okay? So that too is not bullish. So we've got one massive, huge bullish signal in the fact that we got the back test and we found support literally exactly where. And I'm not saying this to brag. I'm just saying so you guys understand that, I know about these things ahead of time. I'm not talking about this after the fact. When the B made this low, I said in the live stream yesterday, that might be the low of the day. There was a untested VPOC right in here. It was the last target to the downside for the market. The market made that low, and I said that might be the low of the day. If this is going to be a back test of the previous balance area high, we may have that's it. The market did what it's going to do to the downside and we're done. Now, I did not think we were going to go sideways at the lower end of the range and poke and poke and poke and poke for hours before we made that move. But I'm just letting you know, this is not something random that I'm calling after the fact. I was calling for this whole time on the way up, that we would come back and back test this balance area. So that is a strong bullish signal now that we did. And all of this is just a reason to be cautious with the bullishness. Okay? So I would describe us this morning as the most likely scenario for today to go sideways in the upper end of the range and then try to head back up and make new all-time highs. That's what I think the market is going to do today. Because the bigger picture signal, break out of balance, come back and back test it, find support, that is the most potent, most important signal in my mind right now. Okay? However, I will be extremely cautious with how I enter trades to the long side because there is so much weakness that we left behind yesterday. And we know that there's a lot of liquidity waiting down there at 6,100. We know there's a lot of stops and the market could very easily just go down, poke, take out those stops, and then make that move to the upside. So this is what I'll be watching this morning as I watch the market trade. Okay. I'm going to be looking at this overnight range. This overnight range is what we call a balance. Okay. It's a bell-shaped curve and it has a 45-degree angle at the high and a 45-degree angle at the low. So there's no other way to put this, folks. This was machines all night long, artificially keeping the market in this range, not wanting it to create momentum to the upside or the downside. That is a sign it's going to keep doing that. That is a sign we're not going to open this morning and instantly go make a 50-point move like we did yesterday, right? This morning, we're probably going to spend a lot of time going sideways, okay? How we handle this overnight range will give us a sign of what comes next. If the 45-degree angles at the low hold as support, so we keep going sideways, but every time we poke into it, it holds, it holds, it holds, it holds, it holds, the higher probability is that we are going to make higher highs today and probably even with the potential, I'm not saying guaranteed, but the potential to try to make new all-time highs today, okay? If this 45-degree angle breaks, if we get below 61.27, if we get below there, that means we probably need to pull back and start repairing some of the weakness we left behind. Now, unfortunately, all we can do is assume we're going to repair one weakness at a time. So new selling below the overnight low would not necessarily mean we're going all the way down to the poor low. It just means we're going to the first week reference, 61.20. So I would be willing to short resistance at the overnight low. Resistance at 61.27, I would be willing to short for a move down to 61.20, but not beyond it. I'd be waiting to see, because maybe all it will need to do is repair that, and then it'll turn around and come back up. And if that doesn't work, if it turns around and it can't come back up, well, then I can target a move to the next week reference. Same thing there. Next week reference, same thing there. And then down below the poor low. I don't think we're going to get below 6,100 today. I think if we came down to the low from yesterday, it would just be a liquidation and they would reverse right back up. Okay. But if the scenario happens where the market works its way all the way down to yesterday's low and it turns yesterday's low into resistance, obviously that would be very bearish and I would change my mind. As of now, I think the highest probability is that we're either going sideways inside yesterday's range or we are going to try to make higher highs. The closer we get to the low, the more bearish I become. But for now, I don't think that's what the market is going to do. Any questions on any of that from the chat? While you guys are typing those up, I just wanted to mention Bookmap has been an incredibly potent tool over the last week when these markets have been tricky and hard to read. If there is an iceberg that pops up on Bookmap and stays there. Now, sometimes they kind of pop up and they move, or they pop up and they disappear and blah, blah, blah. What I have noticed is if there is a iceberg that stays where it is, even if it looks like the market is gaining momentum in the opposite direction. So let's say right now we got these stop icebergs right here. If the market were to suddenly start to sell off and it were to seem like it's going to crash and burn and it's going to fall, but this iceberg at 42 is still sitting here, make no mistake, it's coming back for that later on in the day. These have been incredibly potent signals. And again, it has to stay there for a long time. But if the market continues to move away from an iceberg and it does not come back to test it, but the iceberg stays there, it will come back eventually. So that is another thing I'm keeping a close eye on today because it's been very helpful this week. Okay, let's jump into the chat and find out if anybody has any questions. Nothing from anyone in the Discord. They're just loving the stream. We got Percy in the house. Griff is here. Will, good morning to you. Kang is here. He says he's from Indonesia. Well, welcome. Kevin is here. Stephen W. in the house. Good morning to you. Pradeep is here. Welcome, welcome. Griff says, isn't it a sign of when what should happens doesn't? You'd have to remind me which thing you're talking about. So when what should happens doesn't is a really interesting concept. And since we got nothing else to talk about for the next 15 minutes, we should talk about that. There's two ways to think about a market and to think about creating a framework for understanding a market. There is what is the highest probability thing to happen, right? There is always what is the highest probability thing to happen. You come up with that just from watching the chart all day, every day, and figuring out what happens most of the time. If this happens, that follows. If that happens, this follows. And you learn to recognize what is the most likely thing to take place. However, sometimes what is the most likely thing to take place doesn't happen. That is when the market is telling you something else is going on than what you think is going on. Okay? So, for example, if yesterday, when the market opened, you were thinking the market was going to go make new all-time highs and continue higher, when it made a new lower low, you should have been saying to yourself, well, if it was going to make higher highs, it shouldn't have made a lower low. And so then you would say, okay, the market isn't heading higher today. It's either heading lower or sideways. And so by having a way of thinking about the market in a when what should happens doesn't context can allow you to basically switch from thinking the market is doing this to exactly the opposite. The market is doing that. And that ability to adjust with confidence, because this is still based on statistical probabilities. It's just the inverse of them. Having that confidence to change your mind allows you to, win back your losses very, very quickly. It allows you to stop taking trades that are wrong and start taking trades that are right very quickly. So when you bring up when what should happens doesn't for this morning, when we're talking about yesterday's trade, I would not consider this a when what should happens doesn't. In terms of coming back to back test the previous balance area, all the market has to do is not spend time and bring in volume inside the previous balance area. That's it. It doesn't matter if it's very slow about its reversal. It doesn't matter if it's choppy. It doesn't matter if there's tons of volume near the low. None of that matters. All that matters is that it doesn't come back inside that previous balance area. So think about a balance area like a tug of war game. Once the buyers won and they broke out of there, they should not need to fight that battle again. That battle's over. So all that really mattered was that by the end of the day, we had moved away from that level and that we had not come back in the overnight, which we did not. So this to me is a good back test of the balance area. And again, I know it doesn't look like a V shape, but I would consider yesterday's range a V shape reversal. Just a messy, nasty, made by computers, completely artificial V shape, but a V shape nonetheless. So it's not a reason not to go long today for momentum higher. It's just a reason to use caution, right? Maybe don't FOMO into it right away. Maybe wait to buy the dip. Maybe get in a little closer to your stop than you normally would. Maybe use a tighter stop than you normally would. That's all. It's just a reason to have caution, but I would still describe myself as seeing it, as a back test, which is bullish. Jack in the house. He says, J-Lo ain't never weak. Well, J-Lo may never be weak, but the J-Lo can be weak and is actually quite common. Trevor, good morning to you. Nor Auto Trading in the house. Back from his holiday in Spain. He says, do I have any news from the last 3 weeks? Me personally, no, but if you want to know about what's happened in the world, oh yeah. Stuff's been happening the last few weeks. Changes. Percy in the house, good morning to you. Stephen W. says, what about the Q? Let's take a look. All right. Yeah, NQ, exact same thing. Here, I need to just stretch this out a little bit. Okay. So you had a balance area, market going sideways in a range, broke out, came back. I would consider that a back test, not a perfect back test, but that was a back test of the breakout. V-shaped up out of it, and now we're about to open right at yesterday's high. So that to me looks bullish on the NQ. Yesterday's high will tell the tale. So we got another 10 minutes till the market opens, so it'll probably be near here. If the market opens and immediately pushes down in the NQ, immediately pushes down towards this node around 22,155, that is less bullish to see. And that is more likely we're going to need to spend some time chopping and going sideways. Much like the ES, the NQ has a 45-degree angle on the low. That is a sign it is going to be good, strong support today. Doesn't mean the market can't go lower. Just means it's going to have to kind of poke and grind to get through there. It's not going to instantly pass right through that 45-degree angle. So that is also bullish to see that it will likely hold as support. So I would be bullish if I was an NQ trader as long as we stayed above 22,100. I'd be saying as long as we're above there, I'm better off buying dips, looking for the move higher than I am trying to sell, looking for a larger move to the downside. Okay. If that breaks, then yes, you start to look for a move to the downside and you use references left behind yesterday to target that move. Now let's talk about yesterday's high. What if the market opens and instead of going down, it goes up? Well, then you want to turn this area around. I would say between yesterday's high and yesterday's opening price into support. So the market pushes up. If it comes back down and it's finding support up here around 22,115, that would be bullish to go make new all-time highs. Or to make a high above yesterday or 2 days ago. I think the all-time high... Yeah, the all-time high is a little bit higher. But certainly support above yesterday's high should get you to 22,318. So yeah, I would describe myself, both markets, as very, very cautiously bullish. Bullish, but ready to change my mind quick. We got 7 minutes till the market open. Any other questions for the pirate? Grizzly Bull in the house. Good morning to you. Jay is here. Welcome, welcome. Ken says, what software are you using for market profile on the chart on the left? So the chart you see on the left is Window Trader, and the chart on the right is Bookmap. You may also occasionally see me click back to what I call the market internals, and that is being shown on Thinkorswim. As far as market profile is concerned, just use any market profile software. It doesn't matter. You just need to see where the market spends the most time and brings in the most volume. As long as you got that information, you're good. Griff, responding to what we talked about earlier with the when what should happens doesn't, says, I was kind of thinking about the way it made its move up, leaving those weak lows. Market shouldn't have left those lows if it was really bullish, but it did. I'm bullish on the weekly back test. Yeah, I agree with you. That's the reason for caution. That's what I'm saying. It's like, leaving all those weak references behind is the market's way of telling us it's not ready to go higher. And that's why it's such a mixed signal, because it's telling us it's got rocket fuel and it's going to make new all-time highs, and it's telling us it needs a pullback at the same time. And that's what makes it tricky. But here's what I would just tell everyone when you're thinking about all this weakness. Weak references are exponential in their nature. The more of them that you stack up, the more likely you are to need a dip. However, it works on the inverse when you take them away. So you may leave behind 5 or 6 weak references, but when the market comes back, it really only needs to repair the first one. And then boom, it takes off to the upside. Or maybe only needs to repair the second or third one. And then boom, it takes off to the upside. So it doesn't mean you have to come all the way back to the poor low. And that's why I say, whilst the poor low is there and it's calling my name and it's saying, Charles, don't you forget about me. Don't you forget about me. I got stops with liquidity. Right? It's telling me not to ignore it. I'm not ignoring it. I'm just saying I still think the higher probability is that the market wants to go up today. Don't you forget about me. Kiwi says, any thoughts about BTC? We got 4 minutes till market open. Let's take a look at the Bitcoin. The quick answer is, if you're trading any crypto right now, you're gambling. I mean, you're always gambling, but you're gambling for sure now, because everyone's waiting for the government, right? They're waiting for somebody to make an announcement that, Bitcoin's going to become part of, a monetary policy of some kind. You know what I'm saying? So, reactions could cause anything to happen at any moment. So take what I'm about to say with a grain of salt. Yeah. So it looks slightly bullish to me, but we just want to not lose track of the downtrend line. I'll go ahead and draw it on the chart right there. Yes, sir. So, today, if Bitcoin is able to continue the momentum to the upside, I would say get above 100 and stay there. It is likely to get another big move. Boop, a little pop up to say 103, 102, 103, pretty easily. But I could also make a case that today is the day it's going to get smacked down. And we're going to stay balancing here inside this, what is an enormous balance area. So I like the low from a couple days ago, but I'd have to see it continue its momentum above 100 and hold it. I'd say at least for a day before I'd be willing to buy any Bitcoin. You heard it here first. Danny in the house, good morning to you. Ross B is here. He says, do you put more emphasis on the TPO profile over the regular volume profile? It's not that I put more emphasis on TPOs versus volume. It's that I use both. So I often get a question like, which is better, market profile or volume profile? And it makes me laugh because it's like market profile is you're combining two concepts, time and volume. Whereas with volume profile, all you have is volume. So it's just one has more information for you. And so if you think about an art auction, right? An auctioneer is auctioning something off. I got this painting. It's 1,000, 1,100, 1,100, 1,200, 1,200, 1,300, 1,300, 1,400, 1,400, 1,500, right? As that auction goes up and up and up, there's multiple ways to tell when that auction is coming to an end. One way is fewer and fewer hands will go up in the air. The higher the price goes, I got 1,400, I have 15, 15, I have 16, fewer and fewer people are willing to bid as the price goes up. That's volume, and that's important information. But what else happens as the auction goes up? It slows down. The auctioneer wants to go as fast as he can while there's volume. While there's people willing to bid, he wants to just keep that price going. Move it, move it, move it, move it. There's more, there's more, there's more. But as soon as he starts running out of bidders, he slows it down. So he's like, I got 1,400, do I have 15? I have 15, I have 16, 16, do I have 17? 17, anyone? 17, I have 17 over here. 1,800, 1,800, 18 for the gentleman over here. We got 19, 1,900. Are you sure? 1,900? No 19? Going once. Going twice. Okay, sold to the gentleman over here for 1,800. You know what I'm saying? It's like, that's the way markets work. That's the way auctions work. There's two elements to it. Yes, volume is of value, but time is also of value because the slower things get, the more time people have to think about it and decide, do I really want to pay this price for this asset? So by seeing changes in both volume and time, I have a better edge in predicting when the market is going to run out of steam one direction and start moving the other. That's where I can look for opportunities to trade. I don't try to grab the high tick and the low tick. I'm not trying to predict ahead of time and say, the market is going to come exactly down to this support. It's going to find support and reverse and head up. That's not what I want. That's not how I trade. What I do is I say, okay, this is the first support I'm watching. I watch the market come down there and I see what happens. And I say, oh, look, they're finding support. Then I see that there was less volume and less time spent down there. Now I can go long in here and catch the rest of the move, right? So that's what the auction process is all about. You're not trying to guess ahead of time when the market is running out of steam one direction or another, you're trying to recognize it happening in real time and then be one of the first on the right side of that new momentum. All right. Well, the market is open. Let's jump right in. So we immediately open and move below the overnight low. That is less bullish to see. We repaired the first week reference. So now we're asking ourselves the question, does the overnight low become resistance, literally right now, or do we get a look below and fail? A look below and fail is neutral to bullish. Getting resistance is bearish for a move down to 61.20. So what's jumping out at me? Iceberg at the low. These markets as of late come back for every one of those icebergs. So we're probably going to chop around this overnight low a little bit here and grind around. I don't have to be forced to make a decision right away. I don't have to feel FOMO. I'm not like, oh my God, I have to get long for a look below and fail. Oh my God, I have to get short for resistance. I can go, okay, I know the market's going to grind around here for a little bit. Let's wait and let's just be a little more cautious. Now I got that song, Don't You Forget About Me, stuck in my head. Don't you forget that poor low. Good morning to Danny. Welcome. Zach says, what is the market pulse tracking? The volume pressure imbalance. I really like this volume pressure imbalance. I have it set at like 95 as the threshold. So it hardly ever actually makes noise. It is only at literal very key moments, basically when the order book is being swept, that it ever makes a noise. And so it's just kind of it's like a little notification to me that like something is happening right now. Look at the chart. If you're busy watching a YouTube video and you're distracted, like turn and look at the chart. Something is happening, something important. Pay attention. Because it is only in a moment that they are sweeping the order books that it can become that imbalance, you know? Okay, so again, if I didn't have the iceberg setting, I might be thinking that this is super bearish because we're getting resistance at yesterday's low. At the overnight low. But for now, I know we may just need to get rid of this iceberg. We just need to let it fill. Then we turn around and go higher. Let's see what happens. There it goes. Poof. It's gone. So now the market is free to go up. So another way that I use Bookmap is that I use this TraderMap Pro setting, which basically filters out the bracket bots. We call these bracket bots. There is a set of computer programs that just always leave a bunch of liquidity right above and below price. It's just always trails price on both sides. And it's to throw off other computers. That's why they do it. Because obviously most algorithms are using liquidity to execute decisions. So by using TraderMap Pro, it filters all that out and I can better see what are the real orders in the order book. And I'm right now seeing that there's more liquidity below price than above. Okay. So we couldn't get the look below and fail of the overnight low. That increases the odds, before I even have a chance to say it, that the market is going to 61.20. That is so close to 61.18. I would say the odds are we're going to 61.18. The question becomes, what happens there? Does the market find support and immediately reverse right up and out of there? We now know repairing the first week reference from yesterday wasn't enough for the market to get bullish. Maybe repairing these ones will be. That might be all the market needs. And then it reverses up and out of here. If we get new selling below here, I will be bearish for a move towards yesterday's low. Let's see what happens. Boy, the market is moving fast this morning. It's not giving me time to explain. Okay. So as the market is hammering out a low here, I think the market is going to find resistance and come back for that low. Why? It's still weak. This doesn't count as a repair. So we still need to repair the weak low, and we have the iceberg. So this increases the odds in my mind as we push up to the 21-27 area that will now act as resistance to smack the market back down. Let's see what happens. If you're confused about what I'm talking about, but you're interested in learning more, I recommend signing up for the Piratetraders Brigade. If you look at the banner at the top of the screen, you can see a link over there to the right. It is piratetraders.io/join. You head there, you click the sign up button, you add it to your cart, you pay for it. It's $20 a month, and you've got access to live streams like this every morning while I walk you through these things again and again and again. Ooh, I also just noticed a low volume node. Ba-ba-da-ba-ba. Welcome, Scalping Strategy. Alex says, where do you see the iceberg? So if you look right here on the Bookmap software and you see this little, it's two little triangles. It might be hard to see. It might be very small for you. But it's two little triangles, little green triangles right there. That's the iceberg. And so this is currently showing us that there are three different icebergs there. So from 3 different accounts. And so far, those 3 icebergs have traded 84 contracts. Now, we never know how many they're going to trade. We just find out when they disappear. But it just tells you there's liquidity there, that they want to come back and fill more contracts there. It's very helpful for context. So in a moment like right now, you're not getting bullish. You're instead saying, okay, this is the bounce. Where's the resistance? Because we're coming back for the low. Or anyway, we have a higher probability of it. Oh boy says we got some data at 9:45 and 10 a.m. We will look out for some volatility there. Thank you for the heads up. Any other questions? Anyone new hanging out who doesn't know anything and they want me to explain stuff? Ask and you shall receive. In the Discord, Vornik says, may I ask if you could provide some insight into OPEX and how that will influence today? So anytime you have a major options expiry, it absolutely affects the market. It's hard to say ahead of time what it's going to do. The most common thing is it leads to more compressed days. So if there's like weekly options, monthly options, quarterly options, if they're all expiring on the same day, the market has a very high probability of staying in a tight range and kind of just grinding around that day. If it's just the weekly options, then it's less potent and it has less of an effect. I don't give it a lot of thought, to be honest with you. And I take each day one at a time. So if I'm going to end up having a day where the market is just compressed in a tight range and it's going nowhere, okay, there's the backfill of that low volume node. If I'm going to have a tight range, I'm going to know because of the tempo. I'm going to know because of which support and resistance levels are holding. I'm going to know because of where we're bringing in volume. So I don't really need to even question the OPEX side of it. I will be able to see in the price and what it's doing, what kind of day we have. But that's because I obsess over price action. Because I'm a weirdo. Okay, Bookmap going dark here tells us we are going to get a little bit of volatility on this news drop at 9:45. I like to be on the Bookmap the Trader Map Pro chart when this happens, because you can literally see all the color disappear right before 9:45. Do you guys see that? That shows you how much of the what you see in the chart is totally fake. It is just computers trying to trick other computers. Okay. When it goes dark like this, you just accept that it's going to be volatile, that it's going to bounce around. And then once you start to see the color return, once you start to see this sort of bluish hue, here's a little bit, right? Once you start to see it return, then you know you're back to market as normal. Usually takes about 2 to 3 minutes. Then you can start to trust support and resistance levels much more. It's an extremely valuable tool to help you deal with random volatile moments. DNK says, can we look at the NQ? We can do that for you. Yeah, so it's still inside that overnight range. Yeah, I would describe the NQ as bullish, but I don't feel that way about the ES yet. The ES still feels like it needs to head back for that low. So I wouldn't trust my own call here. But if all I did was look at the NQ, this actually looks bullish to me as a look below and fail. And I'd be asking myself, can they turn 22,114 into support? If so, it's buyable for the move back through the opening price. But like I said, right now, today, I wouldn't do that because the ES wants to come back for that low. Alex says, is this feature only available in the Pro version? Yeah, so you got to have the bundle. The oh man, I can't remember what it's called. MBO, that's what it is. The MBO bundle. Yes, sir. There it is. Stops and icebergs. Beep boop beep 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 boop 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 boop. Convince them we're making a low. Beep boop beep boop beep beep beep. So we can flush them later. Look at all these icebergs at this low, you guys. Computers are trying to artificially convince traders that they're making a low right now. Only one reason to do that. Pew! So they can poke through later. Take out all their stops. There it is. There it is. Okay, so we got some support here around 61.15, 61.16 area. That will have repaired the weak J low from yesterday. That might be all the market needs. If we get support at 61.15, I'd be looking for a move back up to test the overnight low. If we do not get support, I'd be looking for a move down to 61.05. So, moment of truth. Can they hold it? No, they cannot. All right, so we're heading back for yesterday's lows. Does anyone in the chat want to make a prediction? Am I bearish on the day? Like, am I super bearish right now, or am I just bearish on a little move to yesterday's low? Can anyone answer that question? Kirk says, what did you think about yesterday? I kept waiting for the initial balance break. Yes, I too was was very, very surprised we did not break the low yesterday. For those of you that don't know, the initial balance is the first hour of trade for the day. And we spent the entire day yesterday inside that initial balance. We never got above or below it. That in and of itself is an extremely rare event. That only happens like 2% of the time. It's very, very rare that you spend a whole day inside the initial balance. It is even more rare that you make that poor of a low and you still stay inside the initial balance. I mean, it's crazy. But I would say it was affecting me for a couple of hours in here, and then I let it go. I've just learned to adapt to things. When what should happen isn't, I just let it go and I move on to the next thing. Jay says bullish. Gin and Tonic says a little bearish. Christopher says just to the low. Bart says just to the low. You guys are right. You know me so well. So this to me does not mean the market is going to crash and burn and head much lower today. It just means we now have a decent probability that we're coming back for yesterday's low. All we need is one little poke below yesterday's low and we take out all the stops. So I'm not going to be bearish if we poke down there just to take out the stops. Because what will that do? Create an opportunity for the market to turn around and head back up. So I'm bearish now to test yesterday's low, but I'm not bearish beyond it. To be bearish below yesterday's low, I would need to see the market come down and get resistance down there and get new selling. Otherwise, I know it seems crazy. I still think this thing is just winding up for the reversal. And we just haven't quite made the low yet. So they are trying to scare price away with liquidity here. Kevin says, I have a question. I marked a weak low at yesterday's E and a poor low right below that. Is that valid, or should I just be looking for the poor low? I mark them all. Yeah. Anything that's poor or weak, I mark it. Because as I said, the more of those references that you have, the more of those exact reversals at exact levels, the more likely the market's going to come back because it's more stops, right? So think about it like this. The market's coming down. It makes a low. It turns around. It starts going back up. Okay. People are now going long up here, right? Where are they putting their stops? Well, they're putting them down there. Okay. So then the market goes up. It does whatever it's going to do. It comes back down again, right? It reverses that exact level again. What's happening again? Now people are going long again. Where are they putting their stops? Down there, right? Market pushes up again, comes back down, reverses that exact level. The more you do that, the more of those weak reversals that you get where you reverse at exact levels, the more stops are waiting because there's more people going long and more people going long. There has to be more people going long. Otherwise it would keep going down, but it's stopping and starting to go up each time at that exact place. So there's more people going long at that exact place. And that's just more stops waiting to get taken out. So the exponential nature of weak references is the more of them you have, the more likely that at least the first of them will be tested. Boom. That's your 10 a.m. news dump. Liquidation time. Identical as the last news dump. They brought it one TPO below the weak reference so that it still remains weak. Thank you, market. You are all knowing. It's liquidation time. Come on, y'all. It's liquidation time. It's like what? Percy says, is the ES turning? Can you phrase that differently? What do you mean by that? Do you mean on a longer time frame? Is it rolling over to the downside? You can't answer because they have that thing on where you have to wait 4 minutes to write a message. In the brigade, we let you talk as much as you want. So yeah, I think that's what he meant. Is the market rolling over? Is it looking for a pullback? And I would say it is too soon to tell. So let's just take a second and we'll take a look at the chart here. So the way you think about a balance area is you never know how long you need to go sideways in that range before you're ready to break out. And you never know when it comes back to back test it, will it find support and turn around and keep going, or will it fail and come back in? You don't know when you're here. And so the answer is right now, I don't know, right? I have no clue. But if we start to spend time and bring in volume, and again, now we're talking about a daily basis. So this would need to be spending the better part of a day, right? Back inside this previous balance area, then yes, the market is rolling over and it's heading back down. But we can't know that now because right now, what happened the first time we back tested it yesterday? We V-shaped right the fuck up out of there. So that should be our assumption of what's going to happen again this time. We're going to barely poke in and reverse right back up and out. And only when that doesn't happen, only when we spend time and bring in volume, do we then say, okay, we're looking for that larger pullback. So again, I need you guys to understand, I can't pick tops. I can't know if this high is the all-time high for the next 6 months, right? I can't know that. But if we start to spend time and bring in volume, I can know we're going to make that move. If we don't, if we just poke in and reverse, I can know we're coming back for the high. It's about recognizing when things change in the market. All right, guys. Well, unfortunately, this live stream is over. I am heading over to the live stream for Brigade members only. If you are thinking about joining the Brigade, why not give it a try? It's $20. That is less than a half a point on the ES. That ain't nothing, baby. You can do that in 5 minutes. So think about giving it a try, signing up for the Brigade, and we look forward to seeing you in those streams. As far as my prediction for the rest of the day, nothing has changed. I think we're coming for yesterday's low. It is a combination of when what should happens, right? If we were going to go higher, like without getting to yesterday's low first, we should have either just looked below the overnight low and reversed, or repaired that first set of weak references that was right here and then reversed. We did not do that. So that tells us we need to clean up all the weakness we left behind before we get that reversal. So I am bearish right now for the market to come back down to 61.03. And I'll be waiting to see what happens there to decide what comes next. Right now, I would say the more likely thing is we just poke below, maybe get to like 6100, 6099 area. Then we reverse right back up through the opening price. If that happens, that could be a very powerful move to the upside in the second half of the day today. Or we get down here and we get new selling, in which case I'm bearish for further downside continuation. We will just have to wait and see. Only the members of the Brigade will know what I think when we get there. Thank you guys very much, and we will see you here on the Bookmap stream on Monday morning. Have a great weekend, everyone. Members of the Brigade, let us set sail.